Hello my fellow investors and welcome back to another earnings report analysis. Guys, HPQ, the company HP, Hewlett-Packard, today had earnings. And well, basically, if you guys can pretty much just see by what happened once they released earnings. Again, they did release earnings on Tuesday after close, as you can see right here, HP. Well, if you guys can see right here, post-market, yeah, a 6.01% crash. But you can pretty much just see as to how the earnings pretty much just did. They were not so hot, guys. Unfortunately, they were not so hot. So let's actually delve into their earnings report and see what we can learn. So with that said, let's get started with this analysis. We're going to start off, guys, with this article from Seeking Alpha. HP non-GAAP EPS of $1.04 beats by 1 penny. That is hilarious. 1 measly penny. However, what really caused this thing to really come down, guys, it is this revenue of $14.66 billion, which missed by $970 million. So essentially, they missed by $1 billion, which is not good, guys. They also cut fiscal year 22 guidance as well. So guys, let's come over here to HPQ's earnings report. I will have this link, guys, in the description if you guys want to take a look at it, if you guys want to read. It is very, very lengthy. You know, you guys could delve into this like really a lot. But I want to just cover a few of the points here that, well, we may want to see when doing another discounted free cash flow when it comes to this company, because I do want to reassess based on this new information that we currently have. So as we can see right here, third quarter GAAP diluted net earnings per share EPS of $1.08, above the previous provided outlook of 91 cents to 96 cents per share. Third quarter non-GAAP diluted net EPS of $1.04 within the previous provided outlook of $1.03 to $1.08 per share. Third quarter net revenue of 14.7. This is, by the way, what we saw. $14.7 billion, down 4.1% from the prior year period. That is not good, guys. And then third quarter net cash provided by operating activities of $0.4 billion, free cash flow of $0.3 billion. Third quarter returned $1.3 billion to shareholders in the form of share repurchases and dividends. All right, so that's actually not too bad. Now, they do pay out a pretty good dividend, and they are still able to sustain it based off of their shares outstanding. And you guys have been seeing that they have been buying a lot of shares back. So let's actually take a look at this table, because this one says a little bit more information that's less worthy as you have up here. So we have the net revenue, guys. It came 14.7 as of this year, as of this quarter and this year, whereas last year's same time frame it was 15.3. That is down, guys, 4.1%. That is a massive decrease. So just from the prior fiscal year to today, guys, they fell a significant amount. And on top of that, they did miss even the analyst projections. When it came to the operating margin, today it was 8.7%, whereas 1 year ago it was 9%. That is also down 0.3 points. Net earnings was pretty much the same. It increased year over year by 1%. GAAP diluted net EPS, it actually went up from 92 cents the following year to $1.08 this year. That is up 17%. Non-GAAP operating margin, it actually fell by 0.3 points. Last year it was 9.8. This year was 9.5. Non-GAAP net earnings, it was 1.2 last year, and this year it was 1.1. That is a decrease of 10%. Non-GAAP diluted net EPS, as we just saw, they did beat from analyst estimate. They were expecting $1.03. Well, they made $1.04. Last year it was $1, so they did go up by 4%. Net cash provided by operating activities, guys, 0.4 compared to last year of 1.1. That is a massive decrease of 64%. And what's even more surprising is that this one actually gives us the free cash flow right over here. And well, guys, free cash flow is essentially everything, right? Well, here's the problem with this. Free cash flow 0.3 as of Q3 fiscal year 2022. Last year, guys, it was $1 billion. So it was $0.3 billion to $1 billion. So as you can see, it did fell a significant amount, 72%. Guys, that is absolutely atrocious. So basically, when it came to the main two things of making money, the revenue and of course their cash flow, down 4.1% on the year over year and 72% down year over year. Yeah, guys, it pretty much explains as to why this thing collapsed, and it's still collapsing, by the way, down 6.3%. So let's actually come back over here to the discounted free cash flow and see if maybe we would like to reassess this, because, well, I made my assumptions before, and you guys could check out that video. I made my assumptions on this a couple days ago, and I would like to reassess now that we have a little bit more information when it comes to this, right? We see that their projections is actually really bad, especially, you know, that free cash flow and that revenue. So let's actually start with the projected share buybacks, because I think that this actually may slow down. Now before, guys, I had it at 0% over here for the low assumption, 5% for the median assumption, and 8% for the highest assumption. So I'm actually going to change this now to 3% for the median and let's say 6% for the highest assumption. Now when it comes to the revenue growth, guys, yeah, I'm going to have to change this up a little bit because it is, well, it's looking very poor. So for the low assumption before, I had it at 5%. And afterwards, I even said, okay, so let's put this at -2%. And the numbers still worked out that it was still a buy today. But let's take for the lowest assumption, guys. Let's say at around like a -5%. Guys, essentially they missed their projections by almost $1 billion. So that is a lot. Like I get what you guys are saying, -5% negative revenue, that's horrendous. But again, guys, they missed by almost $1 billion. For the median assumption, let's actually go up by this a little bit more. Let's go to like -2%. And for the highest assumption, let's just say at around like 1% or so. Well, now that we have this, guys, we're still seeing that this is still a buy, believe it or not. Even with my lowest assumption, highest margin of safety, we are still significantly below that target share price. Now, obviously, you know, this is getting a required rate of return of 10%. If you guys change this to any other number, these numbers will change drastically. But even with a -5% revenue growth in the next 4 years, right? This is projecting in the next 4 years. Guys, this is still looking like it's not that bad of a buy today. Now, let's actually change this up a little bit because, as I just said, this is within the next 4 years. So in the entirety of the next 4 years, they'll do -5%. Let's increase this to a lot more. Let's increase this to like, let's say -15%, right? Well, now at this point, you would essentially have to wait because, well, $31.10, with the highest one being $28.25 for a target share price, not adjusting for debt. In this case, you would have to essentially wait to buy this one. But again, it really just depends as to what you put in here, guys, because every investment is the present value of all future cash flow. So if you guys agree with my numbers, you know, then fine. If you guys don't, then that's fine. Have these calculators regardless and play around with the numbers. If you know something a little bit more about HPQ that, you know, I may not have covered, or, you know, you have inside information or whatever, please have these calculators and make your own assumption. This is not financial advice. You can also have my book value as well as my reevaluation and even a dividend tracking sheet. So all I'm asking for in return, guys, is like, subscribe, comment. It really does help here on YouTube. That pretty much does it for this video, guys. Like if you like, comment, subscribe. As I said, I'm going to leave this website over here for their earnings in the link in the description below. It'll be the first one. So if you guys want to read it, then by all means go ahead and read it. And of course, the discounted free cash flow calculators, all of them would be in the second link for a video that pretty much has all of them. So guys, with that said, peace out, and I will see you all in the next video.